As we move towards Christmas and the end of another year, it's a time of reflection on things that have gone well over the past 12 months and things we'd like to improve and change in our lives. For many people, that's their financial situation. And it might be that you're thinking ahead now towards a retirement as it gets closer, and you want to make sure that you're going to be financially secure and financially independent so you can do what you want to do when you want to do it on your terms. I'm Andrew Neligan, and in this video, I'm going to explain 3 actions that you can take now to help get yourself in a better financial position in the next year and beyond. Because we get to this period of over Christmas, this festive period, and you might find that you're sitting indoors and it's cold, dark, and wet outside, and the parents or the in-laws are asleep on the sofa in front of the television, and the kids are away doing whatever kids are doing. So you've got a bit of free time. So what better use than now to work out your financial situation and get yourself in a stronger financial position for the future. So the 3 actions that I would take. Action item number 1 would be to work out what your net worth is. When we use net worth in financial services, we mean the difference between what you own and what you owe. So obviously the more you own and the less you owe, the financially stronger you are, the greater your net worth is. So I would be going through all my documents. You might have files and folders full of old statements, or you might have everything online. But I'd be getting the most up-to-date valuation of the various plans and assets that I have. That would be the value of your home. That might be best estimate based on what you can find online. Then the value of all your current accounts, bank accounts, savings accounts, and cash ISAs. The value of all your pensions, the value of investments like share ISAs or general investment accounts that you might have, and any other assets you own that you can either get an up-to-date value or a best guess of. And I'll put those all on a list and then add it up. And then I'll be do the same for everything I owe. So for most people, the biggest debt will be their mortgage. So get your most recent mortgage statement and find out what that figure is. And then anything else that you might owe to other financial firms. That would be car loans, personal loans. If you've built up large credit card debt, get the latest balance for that. And then you simply take the value of total of what you owe from the total of what you own, and that will give you your net worth. And as I said, the bigger the own column, the more your net worth will be, the stronger financial position you'll be in. So that was item number 1, work out your net worth. Item number 2, I would be seeing where my money is going. So that'll be you have to get a bit forensic on it. It's an exercise that no one particularly enjoys, but people who go through it tell me actually it was a really worthwhile job to do, and it can be very insightful. So you want to see where you're spending your money, and that will be a case of downloading your most recent bank statements, or again going into your envelopes and folders that you've kept all them all in, and tracking to see where the money is going. So you'll have your regular direct debits and standing orders, and then you'll have all the other transactions where you buying things online or in store, and you can categorize them into the different categories of transaction. And then what you might do, or if you can't really face going through it so forensically, is at least categorizing them into essential expenditure, leisure expenditure, and luxury expenditure. So your essential items are all the things that you need to live, heat your home, feed yourself and the family, clothe yourself, pay the bills like the council tax and the utility costs and all those regular items that we can't avoid. So you work out what you're spending on essential items. Then you can look at all the money that's going to things like eating out, socializing, going to the pub, going to the cinema, theatre, whatever it is you enjoy doing. Total all that up, or best guess it as accurately as possible, and that will give you the cost that you're spending on leisure items. So these are things that you wouldn't rather give up, but if you had to, if the worst came to the worst, you had to stop spending, you go there. And then you've got your luxury. So that would be the holidays, whether it's summer holidays, skiing, all those stuff that, again, you love to do, but you'd have to forego it if needs be. And when you've got those three different categories filled and you've got the subtotals, then you can see, is there any items that you could stop spending on to save your money and put it to better use? It might be there's direct debits and standing orders that are going out for things that you don't really value or you stop using anyway. So there's some quick wins there. Or it might be you've got to have some difficult conversations with yourself or your partner to say, well, we need to find some savings so we can have our future selves can be in a better place. So what are the things you might cut out so you can have more money later? So when you've gone through that expenditure analysis, the third item is then to say, how can we put our money to better use? And you should be looking at things like your savings. Have you got a big enough emergency fund? So that covers the unforeseen accidents and illnesses, things like the boiler blowing up or the car breaking down, replacing the fridge, whatever it is, all those annoying everyday things that happen that you need money quickly for. Or it might be for cover a period out of work because you want to change job or you've been made redundant. So you know the bills are all covered and the money's in a safe place. And then you'll be looking at longer term uses for your money. Can you put more into pensions, benefit from tax relief? Can you put more money into share ISAs? So you've got money immediately available if you need it, but it's growing, it's working harder, exposed to some investment risk, but it's going to be there growing over the long term. And then what about getting debt down? Can you make overpayments on the mortgage or pay off car loans or credit card bills more quickly to improve your net worth? Now, whether you choose to focus on paying down debt or increasing the value of your investments and your pensions, it's really a topic for another video, but it will come down to personal choice, whether you want to be debt-free or have your money working harder often. And then the final area might be as well, what about if you insure against certain risks happening? The key risks being if you have an accident or you get an illness that prevents you working for a period of time, can you replace a lost income? Or what happens if you die? Will your family, if you still got dependent children or a husband or wife, are they going to be secure? Or do you need to spend some money on a life assurance policy to help manage those risks? So it's those sort of areas that you could be putting your money to better use. So that covers the three items. In summary, work out what you're worth, your net worth, where's all your money going, and can it be put to better use? And if you can go through those three steps this Christmas, it will put you into a much stronger position to get to financial security and get to financial independence all the sooner. I hope you liked this video. If you did, please click on the thumbs up button. If you've got views, opinions, experiences that you want to share, please do leave them in the comments section. If you want to receive more videos like this as and when I produce them, please do subscribe. And if you want to know more about how I help my clients plan and live their ideal retirement free of money worries, please go to neliganfinancial.co.uk. In the meantime, thanks for watching.